Many of you have asked me for an update on Pepsi stock as the stock is down 24% over the last year. It has been pretty much flat over the last 5 years. This is a stock that I talked about many times. I did tell you guys that I believe the stock was presenting an amazing opportunity at $155 to $160 per share, even in the 170s. I believe Pepsi was looking interesting. And so far, I have been wrong on this assessment. I have to admit, sometimes I'm right on certain things, but I'm not always going to be right. And maybe I'm eventually going to be right in a year or 2 or 3 years from now. But I don't know that. But for the moment, so far I have been wrong. And I like to admit such things on YouTube. So in this video, I'm going to let you know my opinion on Pepsi, my updated opinion, I should say. If I still believe Pepsi is presenting an amazing opportunity here at 135, or maybe after the latest earnings reports, I changed my mind and I noticed that the fundamentals are deteriorating and I believe maybe Pepsi isn't the best buy at this price. I'm gonna let you know in this video, and I really hope you enjoy it as always. Now for Pepsi, they did miss on earnings per share. They got $1.48 versus $1.49 expected. They did beat on revenues, but in terms of earnings per share, they missed. And this is not good at all. For Pepsi's worldwide volumes, they fell 3% for the convenient foods. And for drinks, they were pretty much flat. And this is also not something that's really good with the company. And in terms of guidance, the company expects flat earnings per share growth for 2025. They were previously expecting mid-single digits, so 5 to 6% growth. Now it's going to be around 0% to 1% growth. And this is a massive change for the company, and it's really, really bad. Now, what I'm really trying to focus on over here is if this is kind of a one-time event for the company, or if this is a permanent event. If this is a one-time event that I can benefit on, that's just is going to happen this year, and next year Pepsi is going to come back and everything's going to be much, much better, and the company is going to get a multiple expansion. Or this is a permanent problem that Pepsi cannot really fix. And from me looking at the reasons why Pepsi has decided to lower their guidance to 0%. It's due to many different one-off kind of reasons. The first one is tariff uncertainty. Tariff uncertainty is a one-time event. Once the tariffs go in, once we know what the tariffs are, then the outlook will be more stable. But the company is trying to be a little bit more conservative, so they lowered their outlook because of tariff uncertainty. And I don't blame them for doing so. Now, the second reason, which is the most important one of why they decided to lower the outlook, is because of the FDA in the US, which is the Food and Drug Administration. They announced plans to phase out synthetic dyes by the end of the year, so they don't have much time. Now for Pepsi, they will no longer use artificial colors by 2026, which is something that's amazing for the people, it's amazing for the consumer, but it's not going to be too easy on Pepsi, and it's going to wait on operations a little bit, on supply chains a little bit. This is also a one-time event that once Pepsi transitions to no artificial colors by 2026, everything's going to be much more stable. So the two main reasons for the downgraded outlook is the tariff uncertainty and the food dyes, which isn't going to be a transition every single year. I'm seeing something that's more of a temporary problem than a permanent problem. And Pepsi has faced such problems many times. The company has declined or stayed flat in earnings per share growth many times, as you could see in this chart. And many people believe that Pepsi is just dead. It's never going to come back. It's too late on the underlying trends, and just the company is not a good investment. But Pepsi always came back, and they always grew earnings per share 1 to 2 years after, and the company went on. The multiple has always pretty much declined to 15, 16, 17, 18 times earnings, and it went back to the mean of 21 times earnings many different times. And now the multiple is sitting at 16 times earnings, and I wouldn't be surprised if it gets back to 21 times in a few years from now, if this is really a one-time event. So for me, the way I'm looking at everything, I'm seeing, you could say, a screaming buy on a company like Pepsi, because I'm seeing a very discounted multiple to the mean. And the reason for this discounted multiple, the reason for the slower growth, is mainly one-time events which aren't going to be present 1 to 2 years from now. And Pepsi is doing many different things to catch up to certain trends. For example, they recently bought a soda brand called Poppi, which apparently is very popular, and they bought it for around $2 billion as an alternative to healthier kind of energy drinks. And the company is planning to appeal to consumers using GLP-1 drugs by adding more protein kind of products to its portfolio. So the company is not asleep at the wheel. They're noticing those trends. They know that those trends are affecting them. And the company has a supply chain, the best supply chain in the food chain industry. They have the resources, they have the expertise, they have the experience, they have everything you could need to launch or do something with a certain brand. And most of them end up going through the Pepsi supply chain and the Pepsi ecosystem. So for me personally, again, I'm seeing something pretty amazing and a massively oversold stock in this market. And if I look at the main problem with Pepsi, which people believe it's a problem, is the declining volumes. And Pepsi has been facing declining volumes since pretty much 2019, where every single year, it's even in 2022 mainly on a consistent basis, and it's been declining 2.5%, 2%, 1% every single quarter. And the company offsets it by raising prices. They raise prices 5%, 3% out of the last 3 quarters. Whenever they have very good times, like after COVID, they raise prices 17% and 16%, and the consumers took it. Now, many people believe that this is showing weakness. I think this is actually showing massive brand strengths for the company, massive pricing power that I'm seeing in this chart for a company to consistently being able to raise prices on declining volumes, and the consumers are taking it. So I'm not seeing weakness here. I'm seeing a very different picture. I'm not trying to justify this report. That was not a good report, but I believe it's kind of getting overdone over here. And the dividend is around 4.2%. This is the highest dividend that Pepsi has offered since 2013, based on the data that I have. And they have been growing this dividend for over 53 years at a 7.5% CAGR, which is amazing for the company. Now, the number one question I always get in the comments is this dividend sustainable? And they look at the Yahoo Finance payout ratio, which takes into consideration earnings per share. And in terms of getting an accurate payout ratio, you have to use free cash flow. And you have to look at how this free cash flow is calculated and adjust for one-time kind of items. Now, if we look at Pepsi's guidance, they are guiding $8.6 billion of capital return to shareholders, $7.6 billion in dividends, and around $1 billion in share repurchases. Now, if we look at the free cash flow of Pepsi, in 2024, it was $7.1 billion, so significantly lower than the guided $8.6 billion. But in 2025, the free cash flow is expected to be around $10.1 billion. This is a massive jump. And whenever you see such jump, you have to be skeptical that how will Pepsi grow cash flow $3 billion in one single year? But you have to look at why the free cash flow was only $7.1 billion in 2024. And that was largely due to many things within net working capital. And that doesn't happen very often. It is an expense. And sometimes you have it skewed to a certain year where it's a little bit better in a single year, a little bit worse. But it was very bad for Pepsi this year in 2024, which is why they're going to see gains from it in 2025. And it was around $1.7 billion. So if you adjust for the working capital, the free cash flow for Pepsi was like $8.9 billion, almost $9 billion in 2024, which has more than covered the dividend and the buybacks. So to answer your question, guys, the dividend is very well covered and the buybacks are very well covered. And the company is even going to have some $1 or $2 billion left in cash for them to either add it to the balance sheet or buy back more stock or pay down the debt. So the dividend is very well covered for 4.2%, very competitive. And I'm liking that very much. Now, for the company's own long-term guidance, they are guiding for high single digits on earnings per share growth. High single digits for Pepsi has historically been around 8%. But for this example, I'm not going to use 8%. I'm going to use the analyst guidance, which is around 6%. They did downgrade the estimates. They used to be 8%. Now they're 6%. I personally believe 8% is achievable for Pepsi, but I'm even going to use 6% in this video, which is different from my previous analysis videos on Pepsi. And I'm using 1% growth for 2025. Then for the 4 years after, I'm using 6%. Although if the company only grew 1% this year, I would expect 10 to 12% the year after to make up for this year. but we're only taking in 6%. So if we use 6% and we assume that Pepsi gets back to the mean multiple of 21 times, now it's at 16, I'm betting it on going back to the mean. And I did show you guys in the beginning of the video, this is not the first time that Pepsi struggles with growing in earnings per share, and it was mainly due to one-time events. And once those one-time events were cleared up, Pepsi always pretty much came back with growing again in earnings per share, and then it helps the multiple get back to the mean of 21 times. So while this might be a kind of a speculative bet, but I'm personally willing to bet on it. So if Pepsi does get back to 21 times earnings in 1 to 2 years, and using a 4.2% dividend, I'm getting an 83% upside for Pepsi, or around 14.3% CAGR every single year for the next 5 years, which is something that you don't really get with a company like Pepsi. Like Pepsi, Procter & Gamble, something like United Healthcare, if you run such valuation models on them, they pretty much never get to 15% return a year, from my experience. This is mainly because they're defensive companies, recession-resistant, great companies, and they keep bidding up those stocks. But the fact that you could get around 14% CAGR on Pepsi using 6% growth, in my opinion, this is pretty amazing for the company. Now, if I use the 8% number, assuming the analysts were too conservative, and the company gets back to 8% growth, in this case, the CAGR would be around 16%, or the total upside is roughly around 95% over the next 5 years. Now, if you ask me personally, this is looking pretty good for a company like Pepsi. And if I was to buy Pepsi again, which I didn't buy because I found kind of better defensive stocks, a lot of defense names went down, like Lockheed Martin and NOC, they went down. And I kind of took advantage of those dips over the last few weeks, and I did good on them. But for Pepsi, I might buy the stock again. But if I do buy it, I'm not holding it for 5 years. I'm betting on mainly a change in sentiment, and I see massive upside over the next 2 years, maybe 30 to 50%. With a boring name like Pepsi, we've seen it with Nestle. Nestle had no growth, and the stock came back, and the multiple went back to the mean. And I wouldn't be surprised if Pepsi pulls off a Nestle-like move over the next 1 to 2 years, especially if we have a recession or a weaker economic environment. This is when those stocks tend to shine. So I'm liking Pepsi very much. It's looking very interesting. Of course, it gets much more interesting at $118 or $120, but I highly doubt that Pepsi is going there. So for me, I like the stock very much. I believe this is mainly a temporary problem, not a permanent problem. And this is my opinion on Pepsi. I hope you enjoyed it. Not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.